Joining us now, Sylvia Jablonski, Defiance ETF CEO and CIO. That is quite a bit to digest that we'll see. It gives us something to talk about, something to think about, something to worry about, something to look forward to. Which of those do you think describe your feelings for the data? What's most important?
Good morning, Joe. I think neutral is kind of my answer. The biggest number of the week will be what the Fed actually does. I think there's a 96% expectation that we get another Fed cut. It'll be important to hear, what he's thinking for 2025 and if this is kind of the last rate cut for a while and, how the commentary leans. Does it lean hawkish, dovish, continuing to think about cutting if the data isn't line? So I think it'll just be all about, what he says on Thursday and whether or not we cut. I don't think there'll be a huge market reaction, either way, but I do think that the market expects that cut.
And do you think, Sylvia, that the Fed just feels committed? Or do you think that the numbers we got last week, if they hadn't prepared the market, and that's the problem with forward guidance, because the market gets its heart set on certain things. Do you think it's the right move given the warmer inflation numbers that we saw last week?
Well, I think you kind of hit the nail on the head there. It's when you set forward expectations, it's kind of difficult to go back unless the data is alarming. And I don't think that the data is alarming, right? We saw a little bit of a heat up here, but it's also, potentially seasonality. And I don't think that they've seen anything that kind of indicates that they absolutely shouldn't cut the quarter point this week. So, going forward, I think if that changes and we start continuing to go the other direction, that'll be a problem and we'll go back. But, I don't think that the data has really done anything to change their minds. And if you think about where we're at, we're still inflation's still, prices are still about 22% higher than they were pre-pandemic. We have that 2.7 number, ex food and energy, 3.3%. I think if it continues to trend upward, we probably will see a pause on these cuts. If it doesn't, then maybe we'll start seeing sporadic cuts next year.
Markets at new highs, Bitcoin's traded 106. Where's the evidence that interest rates are too high right now or restrictive? The economy, we'll get a GDP revision. 10-year, we've seen, I guess it's under control, but where's the evidence? Is it in the jobs market? Where are you seeing that these higher rates are taking a bite and need to be lowered?
Yeah, I think that's a great point. And if we look at corporate earnings just, over the last year, it doesn't seem like there is a lot of evidence, right, that corporations have been hit by higher interest rates, restrictive policy. But I do think that the small caps feel it. I think that these, smaller companies that invest in growth and participate in things like quantum computing and AI, and they're not like the mega cap names that we all know. I think they struggled for a while, and you're starting to see them kind of start to roar this year, right? I look at some of the smaller quantum stocks, for example, and I think that the rate cuts will help them continue, to spend on R&D and grow, and then, they'll get a little bit of a tailwind from the Trump trade too, from onshoring. So I think like the smaller companies is where you feel it.
So you, at this point, you think the chances that this is another policy mistake from the Fed, you don't think so? You think that, go ahead.
Yeah, no, I don't think so. I don't think he's going to come in and just, cut every meeting going forward. I think that we'll see that 96% come to fruition this week. And then I think we'll hear a lot about, we're probably going to pause for now and see what the data looks like and, kind of see what happens with these inflation numbers going forward. That's my sense of it.
And you think inflation's back in the bottle, in the genie bottle, back in the lamp?
I think it's steady, just given the last couple of months and what we've seen. I think it's steady and stable. I think once we get out of the holidays and kind of see the re-up next year, can better determine what the answer to that question is. But I don't think it's going to go the other way. Okay,
so you like the market's okay? Christmas Santa Claus rally?
I love the markets. I love the markets. I think there are a lot of good places to put your money now. Some new trade ideas out there. Again, I mentioned quantum. You have, all the quantum names: IonQ, D-Wave, Rigetti Computing, Google's Willow. I think this is the next, ChatGPT moment that AI had, I think is Google's Willow moment. And I think you're going to see a lot of flows going into quantum funds, quantum ETFs, things like that.